The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at 11 o'clock, 877-927-6648. Great programming earlier on. Let's see if we can keep that up all the way through the day. Today being Thursday, of course, you've got programming until 6 o'clock with Andy Hecht wrapping it up. After me, you've got Think or Swim, you've got Steve Rhodes, you've got Dave White, Tom O'Brien, and then Andy Hecht. Dow's up 87 at 20,746. Maybe it is part of that end of month, end of quarter buying, but it's still there and it's buying. At 20,746, I'm waiting to see if the Dow closes in the 20,800, 20,820s. I think I have to reconsider this whole idea of whether or not there's a sideways consolidation that's used up time, usurped time, or whether this is just a bounce that should retrace. My thinking is still that there'll be a retracement to test the levels lower down that we just had the other day of 20,814 as a low on Monday. The S&P is only up 850. So this is the S&P 500, 0.36% up. The Dow's up 0.42, so there's a discrepancy here. Maybe it's because oil's running, whatever it is. The 30 stocks are leading the 500 stocks. That's not so good. So at 23.69, let me show you what's happening to the E-minis, up 850. Made that long-legged candle on Monday at 23.17.75. Good turnaround, good follow-through, nice V-shaped pattern. Testing resistance area. So this is going to be very important. I was thinking, I said to subscribers this morning, the 2361, 2363 is kind of the area. We're above that. But the weekly chart has started to show that the 5-week, let's call it a 4-week consolidation is still underway. And until there's a breakout in the 2382 area, I have to consider that the weekly chart is still seeing the stochastic, which is at 83% good, and the MACD, which hasn't turned negative, still that's going to be my criterion, plus the 9-period moving average support at 23.42 for next week. Now, the 120-minute chart broke out. What it did is, and we should make it bigger, what the 120-minute E-mini did, it's done a left side, right side. Let me just see if it can go all the way. Yeah. It has a left side, right side price time match. Let me just draw this in for you right now. I'm going to make it to the highest point, and let's see if that's going to be hit in the next 2 days. And I'll also tell you when, if there's going to be an exact mathematical measurement rather than a visual. This would say that the low that was formed, here we go. So that takes us to, okay. So the high that was made at the failure at 10 o'clock on the 21st of March at 2378.75, that candle opens at 2375 round number and then plunged. And they made an arch formation, went down to 2332.25, a trough C, had a peak E at 2356, another round number, an arch formation, also in the left side, right side price time match, nice fulcrum right there, and plunges down to 2317.75. So if I'm to put, this is almost like an inverse head and shoulders, it's kind of a staple, looks like an inverse staple, and I'm just going to do this as if it was a cup formation, go to the bottom there, the exact bottom. I like it when it's a mathematical formula. Take it to there, draw the, continue this, there we go, continue the Chapman wave right from that low bar there. Inside track, this is an inside wedge, target line, and here we go. And it says, if this rally is to continue, we need to see a close in leg D, a pullback, and then a leg E that essentially reignites the upside, and then there's a chance that you could go to 2378.75, the high that was made at 10 o'clock on the 21st of March, and there will be a left side, right side price time match taking you to 22. That's 8 o'clock tomorrow morning. Could be later, but I'm saying that would be the exact measurement using this as the fulcrum right here, the low that was made. See that? That's in here. This is a very precise mathematical formula. Left side, number of bars, to the right side, cup formation, etc. If there's a failure, then by 3:30 this afternoon to 10:30 tomorrow morning, we should see most of this candle's gain given back and the 2358 level. That means a 7-point decline. So as it stands, let me just do this again. You've got, I'm still in the sell mode in the down the S&P. That's the daily. The weekly has triggered a sell signal. It should be a sell mode, but that sell mode is only confirmed if the MACD turns negative, and it's not negative right now, and the stochastic goes under 80%, and it closes at least once. I like to see twice under the nine-period moving average. I do have a down arrow, but there could still be a recycle. All right, now let's get to the nitty-gritties. So the SPX.X, leg B to the upside, gray, because it's under the previous ones. I call it a gray leg B. The weekly chart has made a peak D. Monthly chart still leg C, and you've got the 120-minute chart. I don't want to do this too quickly. I think this is also leg B or leg C to the upside. Let's go to the QQQ series. That is breaking out. Now, one of the things that I've been looking at, and I mentioned in my newsletter, I have all these about 12 to 18 different bullet points with numbered, and each one of those has a position that we have or looking at, or it is something that we use as information. GE was acting quite well, and I said that is a positive so far with GE, but there were other factors that were negative. But in the meantime, what I'd say when I got to, I think it's number 3 or number 4 in the list, when I go to the QQQ, that's the PowerShare QQQ Trust Series trading at 132.49, I'd said 132.43 is the level to watch. And a break above that extends the weekly, but it says to the daily that you've gone to either a leg E, but it might have recycled. I don't think it's recycled. I'm going to call it a leg E for now, but I have to tell you that this is really good action. To go with that, you've got the weekly chart, as I say, continuing in leg E, and you've got the A, B, C, D. This is leg E in the 120-minute chart. Very strong leg C. Remember, D is what we try to go for in the Chapman wave methodology. Let me just show you quickly what it looks like. Let's go to this one here. You find the lowest trough, and you immediately count each successively higher peak, and you want to get to the fourth highest peak, peak D. This is very important in the context of what we're looking at, especially in the weekly charts. Let's go to gold. Gold is down 5 at 1251, still within a containment area. The GDX, though, is a little lower. It's at 2280. It doesn't have quite the same chart pattern. Neither of them are very negative right now. They're just not very strong. So let's go also to, we want to look at the dollar, the DXY. The dollar right now is up 9 cents at 100.09. Single leg 8 to the upside. Nice recovery in the weekly. We'll talk a little bit more about this, and I've got a lot of questions coming up that I want to answer about the XLF and other areas. I'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. I'm going to go back to the dollar. I do not want to skip this because this is the IWM, the iShares Russell 2000. I wanted to do it yesterday, and then I thought, well, let's get on with the other to catch up. I wanted to get up to speed, but now I can take a little time. Let me just show you something. The IWM has made a peak C, and at all the beautiful candles that suggest that it should be a pretty serious decline, but it only went from 140.86 down to a low of about 132.5. That's 8 points. About what is that? 7.5, maybe 8%, something like that. No, not even that. But what's really important is that we're looking at the chance that there could be a leg C, a peak C that goes to a leg C. Look, 138.64. You've only got 2 points to go to 2.5 points to go to 140.86. We could still make that D as we start to see choppiness in the other indices. So I'm going to try to put the whole package together because I'm considering that by Tuesday of next week, we're going to have enough evidence to say the acceleration, the thing I'm fearing the most is that we do not get a substantial price decline. We get a time decline. And that time effort, usurping energy as we rotate through different sectors, uses up resources without having that kind of V-shaped bottom of a real bottom where the VIX screams up into the 30s or something like that. And then you get a substantial move of months and months and months. Rather, if we accelerate now and the iShares, the Russell 2000 ETF, go to the 142s in the next 6 weeks as the Dow breaks into the 21,500s, 600s, 700s, and the S&P breaks into the let's call it the 2400s, then we're in a phase that is going to be something that we have not seen since 1999, the year 2000. I don't really want that now. What I want, of course, the market doesn't even know what I care. It couldn't care. It doesn't even know who I am. So I'm just thinking I would rather have the consolidation now when we've had so many fantastic moves in big cap stocks. They need a break. And if we don't get that break, instead we start another move to the upside. What you've done is you've created the next level in the skyscraper without building very well a foundation for that next. It's as if what's happening in Israel, I'm not even going to talk about it today, I'll do it tomorrow, is that there's, by law, contractors can add 2 floors to existing buildings if they, that is, I think 4 or 5-story buildings, they can add another 2 floors if they do all the work for free to get it up to code for earthquake devastation. So in other words, if there's ever an earthquake, and evidently Israel does have earthquakes, they want the new buildings and now the old buildings to be processed in such a way that they've been upgraded. And to do that, they've given them an extra 2 floors. But there has to be a foundation to build those 2 floors. And that's really what I'm saying. I'm anticipating somehow by Tuesday, we start to see a sell-off. Doesn't mean that we're going to break down, but I want to see lower lows and lower highs in time, but I would like to see it in price. That's what I would like to see. I also don't think that the volatility index right now, the VIX index, is at. See, it's testing this line, very important line. See this thick pink line, this dash pink line? We've broken under it, we've tested it, we keep going back above it. I want to see that line become a support level, because if there's a close in the VIX under 10.78, the low of the 17th of March, that suggests to me that there's going to be a lot more buying, because the buying pressure under 13, but let alone under 12, let alone under 11, is very intense. Now, my contention has been from the last couple of days is that this low level in the VIX index should really have produced a Dow in the 20,850 to almost 21,000, and it hasn't. And that's telling me that I believe I'm correct in my assessment. We'll know by Tuesday, or maybe we'll know by this afternoon, if the Dow at 20,737 adds another 70 points, and then I'm going to have to say, you know what, end of month buying or not, that is really good action. Now let's go to what I wanted to do. Let's go back to the dollar, DXY. The reason you can see why I wanted to talk about the IWM, because it is possible that the IWM wants to complete its leg D, and that might make an E in the other indices in the weeklies. But that weekly D then says, okay, is this the start of a brand new move, or is it now when everyone has just thrown up the arms and said, I give up, I'm never shorting this market again? Is that the time that we get a deeper correction? That's all. My monthly charts, I'm going to emphasize once again, are absolutely powerful in the Dow and the S&P and some of the others, and certainly the Qs are acting extremely well. Here we go. So the dollar is at 100.04. The pattern I'm looking at says there's been a tremendous turnaround in the MACD and the stochastic, but the stochastic still only at 23%, and the MACD hasn't yet crossed positive. It hasn't even gone to a zero. It's at minus 0.08 in the histogram. And I'm suggesting to you that there's a chance that the dollar might need a little bit more testing of the 99s before it can break to the upside. But if there is a move in the dollar, I'd said this yesterday, into the 100.70s up there, into this trend line, this 50-period exponential moving average, 100.69, so let's say in the 100.70s, then I'm looking at this and I'm saying, you know what? Gold is pulling back, but not seriously. The dollar is acting quite well. We might find that gold and the dollar are stuck in this trading band, just as the TLT, which is down 0.56 at 120.78. This is the Lehman 20-year T-bond fund, and it's holding very nicely. And it says to me there's a good chance that the TLT could break above peak C of 121.97 for leg D. That'll be really important for the weekly chart, because the weekly chart made the arch formation, took it out, closed above it, and is acting quite nicely. But until the TLT closes above 123.14 is the high. I want 123.55 until it can close above that. I'm just saying chop, chop, chop. If you look at the The weekly charts of those yields that we were looking at yesterday, they're suggesting that the upside is capped, but the downside might find some support within a rectangle formation. So let's just go on here. Let's look at high-grade copper. High-grade copper is at this particular, oh, nice move. This is leg C. So there's your A, gray A. There's your gray B. And we'll call this gray C. Let me just change the color so you know exactly why do I call it gray? Because it's still underneath the previous peak F top way back in April. And that says that it could fail at any time. But I've been talking about the rectangle. Remember, I gave you the rectangle months ago, and it held the rectangle. It's going to the upper side of the rectangle. This is good action in the high-grade copper, trading at 2.712, up 0.034. Basil Chapman, Tiger Technicians Hour, and I'll get to the questions as soon as I return. And the Dow is up 82, S&P is up 8.30.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Peavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. The XLF was a question I had. The XLF of the S&P Select Financial Spider Fund trading at 23.88, up 26 cents. Doesn't sound like much, but that's 1.1%. That's very nice. It's in leg B. You know, the daily, the weekly, and even the monthly have the look based on the week technicals, especially the week technicals in the weekly chart, of a shorter term bounce that could retrace, but essentially finding tremendous support in the 23 2240 to the 2270 area. So here's the question. What is the question? Good long trade. What is the target? 24, 25. My thinking here is that I need more evidence on a very short-term basis. I would say because the support just near term, the support looks like you've got a point on a $23, $24 stock. I'm going to suggest that if there's going to be a breakout to the upside, then there's a chance that this trend line right here in the XLF right here, I'm going to make it as conservative as possible, has a target. If it doesn't pull back by Monday, at this time Monday, if it hasn't slipped to under 2360, and instead it's still right here, then there's a chance that the trend line resistance of 2430 could be a target. Reason why I want to make a little bit of an effort to go through this in a different time frames before the 120 has got A, B, C. This is leg C. The reason why I want to just take a moment is that if there is a point or even if there's a 10% correction in the XLF over the next coming weeks, but there is a potential to both retest the high of 25.30. So that's 130. So it's $1.30. Yeah. So if there is a chance of just over $1 in the corrective phase, maybe just even call it $1.50 in the corrective phase, but there's a potential to retest the high of $1 with $1.50 gain. Because if it takes out that high at this particular point, that's going to be really positive. Then I'm going to say, GT, that you might want to start a position, even though this is the day's high. It could even be the high if there's an arch formation. You might want to just start a little bit of a position right here and give it a few days. Because you will know if it hasn't broken by Wednesday of next week, if it hasn't taken out 23 support, but is holding real nicely under all the different whatever market conditions there are, then you could get some kind of a V-shape to say, I'm going to retest the high that was made, or at least the candle of March the 3rd, try to get to the high 25s, high 24s, low 25s. So that's what I'm saying right here. Just risk reward. It's worth, this is one of the sectors that's been in favor. My only concern is this, that if I'm correct in saying that the yields have stalled their upside progression, but they might not have all that much on the downside, perhaps the financials just on the shorter term are going to become a little bit vulnerable, and this is the way you'd find out. And look, today, up 1.16%. I think that's a good thing to keep in mind, that the XLF is attempting to respond positively on every up day, and yesterday was kind of a weak day in the Dow. It had a little bit of a weak day, so that's what I'm saying. All right? So start a position, and treat it as a starter position. Give it a little bit of leeway, and let's see what happens. And let's talk about. We'll talk about it every day, but on Tuesday, Wednesday, we'll take an even closer look and see where it is and look where yields are. Next question was: the Dow's had its longest losing streak since 2012. Was it? Let me just double check. Since May of 2012, and what it's done is. Now, I don't know if I'm going to be correct, because this is one of those stages where we really need the intermediate term. That's the weekly chart to give us a great deal of information. The way I'm looking at it, most of the evidence that I'm looking at suggests that the Dow will make some kind of an arch formation and come back and retest and slightly undercut 20,412, the low that was made in the 27th. And that's going to be the real test of what goes on going forward. I am completely wrong if the Dow goes to 20,850s by Monday or so. I shouldn't say completely wrong, because we've had the longest correction since we had the sell signal. So that part has been right, but I'm completely wrong about retesting the 20,400 level if, in fact, we break out significantly. And this is leg B in the daily. So, okay, let's go on with the questions. Next question is, Bob wants to know AAPL. So Apple's down 6. Whoa! Apple's down 6 cents at 144.06. Let me just do this because I didn't do it before, and this is one of the reasons why the Qs have broken out. QQQ series, the NDX 100 trading vehicle. We've got ourselves an A. Let me see. So that's all A. 141.02, 141. So here we go. A. B. So Apple is saying with today's 144.49 was the high yesterday and 144.50. So this is still leg C. And this is saying Apple still has a little further to go to go on the upside. This is leg F/C in the weekly chart. And it's acting beautifully. MACD and stochastic, and not the daily so much. Let me just double check that. Yeah, the weekly chart F/C, powerful, only green candles. It's been like 2 to 3. This is unbelievable. What a chart. Since the low that was made the week of the 18th of November at 104.08, there have been 1, 2, 3 weekly. There have been 3 tiny little candles in Apple, and yet it is screamed with green candles all the way with a huge green candle this week, and it's in leg B in the monthly chart. Man, what a bull market this is. I have to put an up arrow here. Isn't that incredible? The low was $89 back in May of 2016. This is not even 1 year later, and it's at 144 for a big company like Apple. Very good action. I think it's starting to show a little bit of a teensy-weensy little bit of tiredness right here, based on the candle that we're looking at with the days young. Let's see what happens. So that was the question there. It still looks good. I think it's getting real close to some kind of a pullback. I'm going to Google, which is Alphabet. I just wanted to check something here. Is this 853.40, 853.50? I thought that would be the case, so I have to change this. While I was away, I did a quick look at this, and I said I might have to come back and change the notation. And then I forgot completely about it. So Google is trading this as A. This is really nice to see. There we go. Break coming up. We've got peak A, peak B, peak C, and there's your D for Google. It's made a high, all-time high, at 853.50 on the 21st of March. Pulled back really sharply, just under 805. Bounced nicely, 50% retracement. Weekly chart, peak E. Oh, man, that monthly chart's going to tell us a lot. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Peavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Peavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, looking at the 10-minute E-mini, I completely forgot to do this. We had made a peak D double top in the 10-minute chart. MACD's turning down, stochastic's turning down, but the technicals are still pretty good right now. A break under 2361 says that could be the high of the day. All right, we're going to go to our first caller. We've got Brent in California. Brent, how are you?
I'm doing well, Basil. How are you?
I'm well, thank you. You'd like to look at?
Well, we looked at DNR yesterday.
Yes, did nicely today. It's pulling back a little bit.
Yeah, I wanted to look at ExxonMobil, but I guess maybe I wasn't clear yesterday when I talked to you that, to me, it looked like we might be making a kind of a decent bottom in this sector, oil itself.
Yeah,
stocks seem to be, making some moves that, could be a tradable bottom, and that's what I'm doing. I just wanted to get your opinion on that because they look at. Go ahead.
What I wanted to say is that was the impression I got when you had said to me that you've looked at this for a long time and you thought that now was more the appropriate time to be buying. So that was my impression, that you were thinking some kind of a bottom that is not just a brief test of a low, but something that can at least move towards the upside for the more than short term, more maybe intermediate term, but I would put medium term at this particular stage as 2 to 3 weeks. And if it takes out certain levels, anything you're looking at within that period, you can then extend it another 2 to 3 weeks. So let me explain what I'm looking at. I had gone through yesterday, I can't remember if it was with you or later on when I had some emails. I went through and I said, I think that Exxon I before said CVX has a better chart pattern than Exxon. Then they both came tumbling down, Exxon more than Chevron. And then I said, Exxon's holding a little bit better than the other. When I looked at it that was yesterday, I said, I'm a little surprised because all of a sudden Exxon's forming a better base. And if you're looking at a dividend stock, because of the 2 points that I would give it as a stop, this was when Exxon was somewhere about 81, somewhere around there, 81, maybe 70 to 82. I said as a dividend stock, if you're going to get over 4%, then I'd take that 2% as some kind of, if a breach of the 2% stop would say, okay, now you've got to be careful, but you still have that dividend. So you've got yourself a nice cushion. And I said, out of the two, I prefer ExxonMobil to Chevron. I still feel that way, although I do want to pull up the chart of Chevron. Yep, I do. So I like it, and I think as a dividend stock, the big question is, will it last long enough on the upside for the next dividend to give you that cover, that is. Now, what I'm looking at is, the weekly chart suggests to me that this cluster formation, which it does quite often, has a little bit of upside, and until Exxon trading at 82.73 can take out 84.25, the high of the week of March the 3rd, I'm going to say to you, I'm staying with my 2-point stop, although it has to be raised a little bit here, but I would treat it as an entry level to a dividend stock that has the potential, because USO, I'm not sure if there's an absolute direct relationship, but USO, that's the United States Oil Fund, has quite a nice correlation, but is making higher lows, whereas Exxon hasn't been doing that. But the patterns themselves are matching somewhat. And that weekly chart says the H pattern that keeps repeating on a percentage basis of USO could take it from 10.56 up to the 10.90s or even a little bit higher. Then you got to be careful. So I'd apply that exact same metric as a template and say, now 81.90 to 81.50 should be very good support for ExxonMobil. The real thing is the Chapman wave inverted candle from that peak A minus, if I can pick the right mouse here to do this, with a high of, on the 2nd of March, a high of 84.25. You see how it's all correlating to what we were looking at in the weekly chart? If ExxonMobil can actually trade for a couple of hours even into the 83.71 area, that candle wick says, hey, I should now test the top of that wick. MACD is good, stochastic's improving. I think this is one that I put in my portfolio as a dividend play. Simply make it like I personally would put in a 2-point or a 2.5-point stop and see what happens, because if it's forming a base of support, it doesn't have to break out to get the dividend. It just mustn't break down those 2.5 points. Am I making myself clear here?
Yes, you are. I probably should have explained that I bought this when it was in the 80s. I have options on the thing, calls.
Oh, good. Okay. Oh,
$80 call. So that's kind of how I'm playing this one, not so much.
Well, what month? What month
April.
Expiration? April.
April.
Well, I think that's a good position, because what I'm looking at is any strength needs to take you into the second week of April, and that's all you really need. So let's see how that works out. Hey, good plan. I like your plan.
Okay, thank you very much, Basil. Have a great day.
You too. Thank you so much for calling. And now we're going to go all the way from California. We're cutting coasts. We're going to the other coast, and we're going to go to George in New York. Hi, George. How are you?
Good morning, Basil. Welcome back.
Thank you very much.
Good.
Always good. Always good to be back.
Yeah, it certainly is. You're so right. Today I wanted to look at Annaly Capital, NLY.
Yeah, so let me ask you a question here, if I can just get this organized. There you are. What do you have a position in Annaly?
Yes, if you remember months ago, I had emailed you about this, and I started to add in the 10s because I really couldn't find any large cap stocks that were undervalued, and I wanted to park money, and I felt that this company was bottoming. It's a mortgage REIT company.
So let me just say,
they just bought another mortgage company last year.
Because Annaly was the sexy stock of the 1999-2000 period, going to 2002, and it went from the sixes into the low 20s, and you kept hearing the name over and over, and then it pulled back sharply, then had a big run up, and that was it. And then it came tumbling down, went to about $6.20 or something, trading now at $11.32. You know, I like your position. I like your thinking, and I like the position. And one of the aspects that I'm really looking at very closely is within the housing sector. My question is to myself, what is the implication? Let me just show you this right now, long-term charts. I want to go to this, of the HGX, the Philadelphia Housing Sector Index, holding very well, just hasn't been able to break out. But here we go. But you can see, this is the chart with the black background. The one at the bottom, the one at the top is wood, which is the iShares Global Timber and Forestry ETF. But the one at the bottom is HGX, trading at 265.54, down 28 cents. holding very nicely, but it's got an F/C. And my thinking is this. Let me just go to the same thing. And the only reason why I want to do this is because I've done a lot of, how can I call it, anecdotal work on what I'm looking at in the real estate sectors. And because I was overseas, because I was in Israel, and I always think Israel very often mimics the United States in time and price and fads. I even saw people with tattoos there. I wanted to get a feel there for what's going on. So let me relate it and tell you what I'm thinking in terms of the mortgage business, and we'll be right back. Folks,
Wonderful.
Dow up 64 is up 6. We'll be right back with George and
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Well, folks, we're back. So this is what I wanted to say, George. I think, so the issue now, there are two things that are going on with NLY. When I look at the housing sector, I'm just a little bit, I'm looking at it and I'm saying, with such fabulous news coming out and all that, the HGX should have gone much higher. So I'm thinking this is part of the consolidation I'm looking at. Therefore, NLY at 1114, I wouldn't be surprised if it needs to come back, test the 1090. You could even test the low that was made back in March the 9th that was at 1063. I don't know if it has to get there, but I think it's consolidating. What I do like is the very slow, methodical move in the monthly chart. And that to me says that you should have, based on the technicals that I'm looking at, the weekly and the monthly, it should have very strong support. It's at 1114 now. On the 9-period moving average in the weekly of 1088 and the monthly of 1060. Now, I know you've got a lot of patience. So I'm going to say to you, I wouldn't be adding right now It gapped down, and today it's not really breaking down, but it's not filling the gap. And that's saying to me that the gap from yesterday, whatever the news was, is saying that, yep, it could go a little bit lower. What I'm going to suggest to you is, as an add to position, I would just put in a bid between $10 and somewhere between $10.83 and $10.63, somewhere in that range. I say, you know what? If it pulls back to that level, that's where I would like to start treating it as a base for the next move up. That's really what I'm thinking.
Okay, great. I appreciate that.
And congratulations. That was a good one.
Dividend, and housing is up, so I just thought it was common sense. It was a good area just to park some money for a while.
Yes, absolutely. I don't disagree at all. Not only that, even if rates move up just slightly, people are still going to be wanting at this phase to get the low interest rates. They're still low historically. Hey, nice move. Thank you so much for calling, George.
Appreciate it, Basil. Welcome back again.
Thank you very much. So, folks, let's just do this. I'm going to do IYT, and then tomorrow I'm going to talk, if I remember, I'm going to talk a little bit more about what I'm looking at internationally, real estate-wise, what I'm seeing, what bothers me, and what I like a lot. That's really what I want to do. But in the meantime, the IYT, nice bounce. I'm just treating it as a bounce in the iShares of the Transportation Index. Let's just go through this real, because it's window dressing. You got to treat this move right now as a little bit suspect. Some of these stocks are absolutely getting toppy. You can see we looked at Google. We looked at, let's see what Amazon's doing right now. AMZN. Yep, it's pulling back a little bit. It's been great. Oh, I didn't finish the notation there. I'll do that for tomorrow. But in the meantime, let's just make it real simple on the day. The VIX index is at 1148. It's up 6 cents, and the Dow's up and the S&P's up, and it's really commanding my attention here because it's saying, for one of the first times, you're seeing the market up and VIX is up. We've seen that before. Two things. If I am looking at the VIX index, if the VIX closes the day towards the 1170s or higher, and the Dow gives back quite a bit of the gains and the S&P gives back a bit of the gains, tomorrow becomes absolutely critical. Tomorrow going into Monday at 1 o'clock to 2 o'clock, I would say for me that's going to be the evidence of being either wrong about the short side and about the market consolidating, well, being right up until now, but continuing the consolidation, or that it's done and then we're going to break to the upside. My thinking is that the volatility is suggesting that there is some buying by institutions and that we've just got to keep it in mind. If there's any chance that the Dow closes negative today, that'll be the hint that I've been looking at for quite a while to say the low VIX cannot support the market by itself. Buying is starting to see selling, and that's going to be the evidence. Have a great day. I'll see you later on with Tom O'Brien for an interview, but otherwise I'll see you tomorrow. Have a wonderful session.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.